morning, welcome to CATEX TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Friday, November 7th, 2008. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London, 12:30 p.m. in Bermuda, and 9:30 a.m. in Mexico City. If you need to reach us during the broadcast, phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX TV. On this day in history, for those who remember, on November 7, 1917, the Bolshevik Revolution occurred in Petrograd, when the Bolshevik Party, led by Vladimir Ilyich Lenin, overthrew the provisional government of Alexander Kerensky, setting the way for 60-some years of communist rule in Russia. Today's birthdays: Billy Graham, the American evangelical preacher, is 90 years old today. We go from Billy Graham to this story, but this is a breaking story, and it is an insurable interest somewhere. This comes from Austin, Texas. One person has been injured in an explosion that occurred about an hour ago at a Texas vodka distillery. Firefighters were attacking the flames at the San Luis Spirits Distillery in the suburban Austin community of, and this is a true word, Dripping Spirits, southwest of Austin. The injured worker was burned. He was airlifted to Brooke Army Medical Center's burn unit down in San Antonio. But the name of the company of the insured is the San Luis, L-U-I-S, Spirits Distillery. And now we'll go to our main news. The first news that comes out are some U.S. economic news again. These are the nation's jobless numbers. The nation's unemployment rate in the U.S. bolted to a 14-year high on a 6.5% total unemployment rate in October, as the government announced another 240,000 jobs were cut. It was proof that the economy is almost certainly in a recession. The new snapshot released by the U.S. Department of Labor shows the crucial jobs market deteriorating at a very rapid pace. The rate zoomed to 6.5% in October, this from 6.1% in September. Unemployment has now surpassed the highs seen after the last recession in 2001. 240,000 more jobs were cut in October, marking the 10th straight month of payroll reductions. Employers had cut 127,000 jobs in August, compared with 73,000 previously reported. This is an augmented August number. So a whopping 284,000 jobs were cut last month, compared with 159,000 jobs first reported. This is an augmented number as well. So far this year, 1.2 million jobs, which is a very big number, have disappeared. Economists were forecasting an unemployment rate that would rise to 6.3%. This, in fact, now has gone up to 6.5%. The stock market actually has gone up after two horrendous days. It's up about 91 points now. To reinsurance land, Munich Re came out with their numbers this morning. Shares in their company are trading up a bit. This is after Munich Re booked a 260 million euro consolidated profit. Profit, nevertheless, for the third quarter, down 77% though from the prior year profit. Cat losses and a 66% fall in investment income took their tolls. In a statement, the CEO, Nicholas von Baumhart, blamed upheavals in the markets for Munich Re's considerable equity investment losses. They have revised downward Munich Re's profit guidance, saying that annual profit will probably not reach 2 billion euros or earnings per share of 10 euros. However, the company maintained that the dividend and share buyback program will continue. They stick to their group's per share target of at least euro 18 per share by 2010, as well as the 15% on risk-adjusted capital return target. The group's income fell to 674 million euros for the third quarter. This compared to 1.99 billion euros for the same period a year earlier. Munich Re pointed to the high cost burden of 1.2 billion euros from major cat losses, of which 300 million euros came from Ike and about 90 million euros came from Gustav. Their combined underwriting ratio was up to 101.3%. This is for the reinsurance book, of course, which is all they write, compared to 97.1% a year earlier. In the U.S., Ford Motor Company said this morning that it has lost $129 million in the third quarter as the struggling car maker burned through $7.7 billion in cash. Ford also said it will cut about 2,260 more white-collar jobs in North America. Ford says it lost 6 cents per share for the quarter compared with a loss of $380 million or 19 cents a share a year earlier. The company posted a pre-tax loss of $2.7 billion from continuing operations. It was, however, this is an accounting game, offset partly by a $2 billion gain as the company shifted retiree health care liabilities to a trust fund run by the United Auto Workers. Ford's global automotive operations had a pre-tax loss of $2.9 billion for the quarter, compared with a pre-tax loss of $362 million for the quarter a year earlier. Now, on General Motors, let me check this, GM was supposed to come out with their numbers at 10:30 a.m. Eastern Standard Time, which was about 65 minutes ago, and they sent out a notice to the market saying that the numbers were being delayed, and then simultaneously announced that they were coming out with major important announcements. Whether this means that they have finally acquired Cerebrus, Cerebrus's owned Chrysler company or not, nobody knows. I'll keep monitoring this. Hopefully they'll come out with some information before the end of the broadcast. In the United States, the Treasury Department last night has told insurers that they have been ruled eligible for assistance under the Troubled Asset Relief Program only if they have a federal regulatory link, such as a thrift charter or a bank holding company charter. Treasury Secretary Paulson made the announcement. The insurance community has been watching this closely. Life insurers who are members of the American Council of Life Insurers have petitioned the Treasury to participate in the program. However, property and casualty insurers are saying that they do not need to participate. Treasury confirmed that insurers wishing to participate in the program have been given permission to simultaneously apply for aid under the program as well as apply for the thrift or bank charter that would be required in order to receive the aid. At the same time, an insurance industry official said that one property and casualty insurer, Chubb, based here in New Jersey, had been approached by the Treasury Department to see if it would take money under the TARP program as a means of acquiring other troubled insurers. Chubb supposedly had rejected the appeal. Paulson apparently received a letter from Chubb at the end of last month saying that the company declined to participate in the TARP program. A spokesman for the Office of Thrift Supervision, which supervises the banks, confirmed that there had been expressions of potential interest in obtaining a charter by several insurers over the last few days, but no applications have been submitted. The Office of Thrift Supervision said that about 15 insurers already hold thrift or thrift holding company charters. It declined to identify them. Treasury said in a statement last night that insurers without any established federal regulatory oversight mechanism are out of participation in the program. In a noteworthy speech given by an acquaintance of ours, Henry Keeling, who is a native Bermudan and a former head underwriter at XL Capital. We've known Henry for a while, and he gave a talk yesterday down in Brighton in the UK to the exchanging conference, and we'll give you a pretty full version of this. Underwriting must improve, says Keeling. Growing pressure on investment income means underwriting, quote, must be king for insurers to survive the economic downturn. Keeling was the former vice president and CEO of XL Capital. In the speech yesterday, Keeling is now retired from XL. In the speech yesterday, he said that the troubles in the insurance industry have to be viewed in context with the economy as a whole. He described the economy as, quote, heading for a downturn the likes that none of us have witnessed before on a global scale. He criticized the belief that the insurance industry is recession-proof, suggesting that if you think that, perhaps, quote, you should go and ask the folks at AIG or even my old shop, XL, and ask them how secure they feel at this time. The industry's investment portfolios are causing it the greatest damage now, he said, estimating that about $150 billion in destroyed shareholder funds would be lost in the international markets during calendar year 2008.